Hello everyone, this is Ken Simpson with the Stocks to Watch for May 29th, 2019. We're doing a midweek presentation here for reasons we'll show you in a second. The following presentation is for educational purposes only. Nothing to follow should be considered investment advice or a recommendation to buy or sell any security or a recommendation to participate in any particular trading or investment strategy. Trading involves risk of loss and you assume all of that risk. This is not your investment advice and may not be suitable for your situation. I am not your investment advisor. If you want to have someone to blame for your losses, hire an investment advisor. You can follow me on Twitter at Crystal Bull. The charts you're about to see were created using MarketSmith, which is a registered trademark of MarketSmith Inc. They've been enhanced with a custom Chrome browser extension that I wrote. Please don't ask for a copy of the extension. We will not distribute it without permission, and MarketSmith will not give us permission. And let's get started. We'll start here with the NASDAQ 100 on MarketSmith, just to show you why we are doing a midweek here. IBD via MarketSmith has the market in correction. They called a correction here at this minor bottom. The Crystal Bull timing model remained in the market and exited up here on this day, and that's when the model exited and the market has sold off since. Today, intraday, the Crystal Bull trading indicator issued an oversold alert right here at the bottom, and we'll show you that in a second. The market bounced off that and the signal did not hold through the close, so officially the model is out of the market still, but we want to be paying attention to this. If the market drops more, we'll probably get another oversold indicator. Maybe not, but we want to pay attention. This may be a time we may have picked up the bottom, and we'll show you that here on the chart. So here is the Crystal Bull trading indicator. You can see we exited the market back here, and we've been out through all this noise. Right here, the model picked up a bottom, and the market bounced right off that. So we picked up an oversold position right there. And the market has pulled up, and not too great, but the model figured that as a bottom. We may get a little more bottoming action here, but the market bounced off our signal once again. You can see that it's picked up bottoms all along in here, and picked up a couple of tops as well. So we're paying attention, and it may be time to get back in. So we want to be ready. If you want to buy single stocks, again, this is not investment advice, but if you're looking to purchase individual stocks, we're going to have a couple here to look at. Okay. This is a lot of this sell-off is there's been a lot of chatter about the yield curve inverting. We show here the short versus the long, which is a 3-month Treasury bill versus the 30-year Treasury bond, the shortest versus the longest that we follow. And you can see that the yield curve is indeed falling, but it's not inverted yet. Okay, we're down in here, and you can see if you look at this, the market may still have room to run here. This is not, we're not inverted yet. Okay, we're getting closer. It's time to be cautious, but we are not inverted on these. There are different time sections that are inverted, but we don't pay attention to those. This is the one that we find has the most value, and it's falling, but it's not inverted. Okay, let's see. This is our macro indicator. You can see it's also getting weaker, but we still got a lot of room left in this one. All right, this is in our opinion is better than following the yield curve. It's picked up the recessions very well, and not only the recessions, but it's picked up other times to be out of the market. Picked up times here, it picked up times back in here in the late 70s to be out of the market, not just picking up recessions. But it's falling. This is weakening, but not negative. So we're not out yet. We're cautious, but we're still in. Okay, and we want to just take a look at the treasuries. This blue line here that you'll see at the bottom, that's the 3-month Treasury. The 30-year and the 10-year have been relatively steady. The reason why the yield curve is tightening and flattening out is not because long-term bonds have fallen in rate, which means you'll hear pundits tell you that people are moving money, they're getting afraid of the market, they're moving money into the long-term treasuries. Yeah, not really. What's happening here is the short term is coming up, and that's basically due to the Fed actions, and that's pretty much what causes inverted yield curves along the way as well. The 3-year, of course, fluctuates much more percentage-wise than the long bonds do. But here we go. The short-term rates have been coming up, getting close to going inverted, but you can see as they've done this before, you know, it got up here only halfway through the run last time, and here had, once it got up here, had plenty of room to run in the past. So it's the yield curve is flattening, but it's not inverted. The macro indicator is still in. The trading indicator picked up a possibly oversold condition, and so we want to be ready. Okay, so let's look at a couple stocks. We'll go to Kirkland Lake. Okay, we've got a sloping trend line in here. I got a couple of those actually. Let's go with that one. Now, the reason why this is here is we've had a really nice run up and put in a cup with handle. Now, Marcus Smith's just picking this up as a consolidation. The reason here this is not a legitimate handle is it's too low in the base, but we're gonna call this a handle from before, and just watch this. This doesn't mean we're gonna run out and buy this. This is weak. This is showing weakness here. The RS line is falling, but if it were to start to rise again, this could be something that we want to pay attention to. We would maybe call this a legitimate handle at that time, but until then we can't. We're just going to watch it. It's got a 98 composite rating, only one stock checkup flaw. It's got 112% earnings growth. This is in Canadian dollars. You get 54% sales growth, and we want to be paying attention to that. It's a flawed handle, flawed cup with handle. It's more just basing, but if it started to rise out of here on any volume, you're going to have to surpass this volume here in order to be meaningful, in my opinion. So we're just watching that. Zscaler also had a real nice run up. It blasted out of here. We just put a sloping trend line in this. Really too high to call a high handle, but we're going to count this as a high handle for a minute because we have earnings due tomorrow. So we're going to watch this. This may just fail and go down, and we don't care. We're not in it. But if this were to blast off here, you got 280% earnings growth, 65% sales growth, 99 composite rating, 6 stock checkup flaws. Something to pay attention to after we see earnings. The RS line's been coming down, but you got a real nice RS rating of 99, and it is a growth story. If you look over at the numbers here, this is a growth story. So if this were to take off, hopefully you'd see a gap up and maybe an entry point there. Okay, until then, we're just watching it. These are stocks to watch. It's not called stocks to buy. Okay, Twitter did put in a handle here. I'm going to go to the weekly to show the run up a little better. Now, it's had some overhead supply, but we're going to discount that. It's long in the past. Had a beautiful run up and put in a cup with handle. Now, Twitter is a growth story. Okay, look at how their earnings are coming. Nice. We've had a lot of chatter on there, especially with all this politics going on, but it's people are migrating more and more to Twitter, and that is part of their growth. 131% earnings growth, 18% sales growth, 5 stock checkup flaws. So anyway, we're watching that. We would like to see a nice run up on volume. Their volume's been weak here, which is what you want to see in a handle. Drawing up a volume, that's a plus. So we get a bounce out of here. We've got the alarm set to go off to pay attention, but might take another stab at Twitter. We owned that in the past, and may take a stab at it again. IIPR, Innovative Industrial Properties. It's a REIT. Had a nice run up and putting in a base. We're not typically fond of REITs, but something to look at here. They are affiliated with cannabis properties, which has been a hot item and probably still has a lot of growth left in it. But this put in a base. It's a 4-stage base, according to Marcus Smith. Very weak to today and yesterday. But we do have this alarm set to go off if we're to pop out of here. Real nice. This is not really EPS. It's funds from operations, but same thing. We'll call that earnings. 135% earnings growth, 140% revenue growth, 99 composite rating, 2.5 stock checkup flaws. We're going to watch this and see if institutions come into this on high volume. Until then, let it fall. We don't care. FNKO, a smaller company, $13 million daily liquidity, had a nice run up and put in this long base. Now, Marcus Smith is calling this another base off of this run up. Okay, it's still part of the long base, but we're going to watch this. You have a power of 3 here where you have the consolidation of the 3 moving averages. That's the 10-day, the 50-day, and the 21-day exponential moving average. Good earnings and sales growth. 97 to composite rating. I'd like to see a launch up here and hopefully use these three moving averages as support lines as we make our trade. Okay, we got the alarm set to go off. This is sort of a made up line here, but we put in a sloping trend line just to get a little early notice if this thing started to run. HubSpot. HubSpot is another good growth story. If you look at this, and they've have nice earnings and sales growth, 99 composite rating, 5 stock check of flaws, a little bit of debt, 130% debt to equity ratio. Decent run up, put in a base. They're calling this a part 2 of a first stage base, and it broke out and failed. It didn't pull all the way back to the loss here, but it did peter out. So we didn't want to rush into this, but we've got the alarm set to go off if it were to break out again. A lot to like about this stock as a growth story, and we want to see a breakout on volume. CHGG, we're calling this a double bottom. Marcus Smith isn't picking it up as so. It's only 17% deep, but had a real nice run up and put in this double bottom. 2 legitimate shakeouts here. Okay, high volume. So we've got a shakeout plus 5 to 10% alarms to go off here. And if this were to start to come up, you'd have a power of 3 again with your the convergence of the 3 trend lines, the moving averages. So that's would be definitely a positive. You have several reasons to go into that, and that is a growth story. Another one coming from losses to nice gains, and we'd like to pay attention to that. Repligen, okay, this had a real nice run up and put in a little sloppy base here, but this is a first stage cut. And it broke out and failed and broke out and came back and starting to break out again on decent volume, 65% earnings growth, 35% sales growth, 2 stock checkup flaws. Okay, that's right in the buy zone. Another growth story. Okay, Etsy. Etsy's just been moving up here. You know, it's a tough stock to if you're going to be watching this during the days. It's a tough stock, but here it is putting in a second stage base, and we've got a sloping trend line here to be alerted if this were to go off. 140% earnings growth, 40% sales growth, 98 composite rating, and putting in a base. DocuSign. Okay, DocuSign had basically this is a cup with high they call a handle here. This is another handle and yet another, but this is basically another base. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks long here. So we're going to count this a new base off this run up. It's a second part of a first stage base. We've got this sloping trend line to go on here, and you got a power of 3. 500% earnings growth, 34% sales growth. Okay, it has a low PTM, pre-tax margin, which is why it has been off of our list in previous weeks, but we're going to just watch this one. It's starting to look pretty good here. The RS line's coming up, and we've got a power of 3. We bought this here off this breakout, and we had to sell it for a small loss, and we missed all this, which we're happy about. But that's why you got to sell them when they turn into dogs. Pump. ProPetro Holding Corporation. Okay, this is in fracking, but it had a real nice run up, and this is putting in a double bottom. All right, and real shakeout here, and we've got a shakeout plus 5 to 10%, 60% earnings growth, 42% sales growth, 87 composite rating. But we're going to watch that as a double bottom. This thing may be heading south, and we don't care. We don't own it, but if it were to start to run up, we want to pay attention to that. Okay, would be a nice looking double bottom, almost textbook, with this beautiful run up and almost a textbook double bottom. And a real growth story here if you look at these earnings numbers. Okay, let's go to YNDX. It's a Russian company. See what you want about that. Anyway, had a decent run up and putting in a base. And it's a flat base. We've got a sloping trend line here to come off if this were to start going up. You got a real high volume shakeout here, turned into support. So we want to pay attention to that. You could have basically right at a power of 3. Okay, earnings and sales growth, 5 stock checkup flaws, but had a nice run up and putting in a base and the power of 3. So you would know for sure you'd have to take your losses here. It's just 34 or 50, let's say, but you do have a support here as well. So You don't have to sit around and wait for this to go zero if you're wrong. And finally, 5 below. Decent run up. If you come off this base, this was a double bottom. Now it went longer. You got a real long base, broke out and failed. All right, and still failing. These are not good. All right, but we've got earnings coming up in 7 days, in 1 week. So we want to watch that and see if this were to break out again. It's basically a discounted retail store, and those have been doing well. And if people are thinking we're going into a recession, these discount stores should do very well. So if you're a recession hawk here, this is something you still might want to pay attention to. 34% earnings growth, 19% sales growth, 99 composite rating, and 6 stock checkup flaws. Okay. Just remember, this was for educational purposes only. Nothing I said should be considered investment advice or a recommendation to buy any of these stocks or REITs. I'm just showing you how somebody might make a list of stocks to watch. If you believe we're going back into a bull market, Investors Business Daily thinks they were in a correction. The crystal ball timing model is still out of the market, so it is time to be cautious. Don't just run out and buy these. But if you're looking to get into some stocks, watch them. All right, and that's it for this week, and thanks for watching.